7-1 declining to advancing stocks, but it's improved in the last 15 minutes. Let's take a look at the sectors. The important thing is the groups that have had the toughest time in the last month or two, banks and energy, were the ones leading on the downside. Banks have come off of their lows, though. Tech's a little weaker. Consumer staples, which was a relative outperformer in the very open, also has been weak. Utilities down 0.7%. Dow movers here, if you look, it's the big global industrial names, your United Technologies, Boeing, Caterpillar, that are among the weakness here, Goldman Sachs and Chevron as well. Relative outperformers are Procter, Merck, McDonald's, some of the more defensive names. So the question is, do we get any more of a year-end rally? We've been debating this for the last several days. Everybody wants to just get out of December, but the hopes here include a pension rebalancing. There's still significant money theoretically floating around for a rebalancing from some of the pension funds. We've noted buybacks. We've had 80 of them over the last couple of weeks, and there is still a lot of fresh money, unbought money that's still floating around. We've talked about end of tax loss selling, usually happens by the second week of December, and short covering. Now, yesterday we got some new data on short covering, and a lot of the names that float around that are among the most heavily shorted did indeed bounce the most yesterday. So Chesapeake, Caesars, Abercrombie, Bed Bath & Beyond, these are among the most shorted names out there. They significantly outperformed the market. So I think it is reasonable to conclude that short covering might have played at least a part in the rally yesterday. Not the whole thing, but at least a part of it, at least among some of the names that are the most shorted out there. Let me just talk about the tax loss selling. This is very difficult to get your hands around, but basically the worst performing names going into December were even worse through December. This lends credence, and here's some of the big names out there: Newfield, Western, L Brands, Alcoa, General Electric. These all dropped notably in December, even worse than they were before. This lends credence to the idea that tax loss selling does have some influence, at least on some individual stocks. Now, the hope, of course, is eventually that abates a little bit. General Electric's been a disaster all year. Going into December, it was bad, and you can see its drop is not as bad, but obviously people have been selling General Electric well before that. So if you throw on the effects of heavily shorted stocks on top of the tax loss selling we saw in the first half of December, I think there is unfortunately a lot of year-end gyrations going on and positioning for year-end performance that makes it very complicated to get to the underlying fundamentals. That's why everyone just wants to get out and go into December. So if you look at some technical internals here, yesterday we had what's called a 90% upside day. 90% of the volume, 95% of the volume was stocks to the upside. That's a very rare occurrence and often signals a short-term, at least bottom, particularly when you put a string of them together. We don't have a string of them, but it's been horrible in the month of December. 5 of the prior 7 trading sessions, we had 80% downside days. That's a lot of selling to go through the market. So you use these kinds of internal indicators to try to figure out when there might be seller exhaustion. We don't quite know, and some of these indicators haven't worked as well because the numbers have been so overwhelming. They'll be studying this month in December for many, many years in the technical analysis school. So bottom line is, we're still looking for some kind of clear bottom, but the tax loss selling exhausting itself and some of the short selling, perhaps short covering, contributing to yesterday's rally, I think are definitely at least somewhat optimistic signs for the market. We're off of the lows, but still down here 315 points.